What's poppin', everybody? Welcome to another video, another part of the series. We're on part, I don't even know now. I've been recording a bunch of videos. That's besides the point, though. This is going to be how you look at your economic news data. Ooh, this is your economic news data calendar. This is what you're going to be getting very acquainted with. This is what it is. This is how you're going to be looking at it. I'm going to explain to you guys why this is so important, and a lot of people oftentimes overlook this in their trading. Now, what is this? What are we looking at? What are all these red folders? I am on forexfactory.com. If you do not know what this will essentially tell you the news, events for the world, the political, economic, everything that you need to know about the market. This will tell you. Now, why do I only have red and orange folders highlighted? Because these are the most important and what affects the market the most. The market will be most volatile based off of these data events and the times that they occur. As you can see, PMI 10 a.m., 8:15, 10 a.m. A lot of times, a lot of these events will happen New York open, either pre-market, at open, or right after 10 a.m., 8:30, 9:30, 8:15. These events will heavily add volatility to the market. They're supposed to, at least. They may not always, but for the most part, I'll say 8 times out of 10, these will drive the market. This is important because you don't want to be in a trade and you forget that we have 10 a.m. news and then all of a sudden the market starts going crazy. The market has crazy death candles, crazy wicks. A death candle is essentially a super big wick that wipes out a lot of people. You do not want to be in a trade when news is happening. I often advise, if you don't have a setup 5 minutes before news, don't take it. I like to wait 2 minutes after news before I take anything as well. So give the market time to settle and also give the market time to prepare, because if you're not in a trade 5 minutes before news, oftentimes you will be slow. We will start to consolidate a little bit prior to that event. Look at news like a bull in a cage for the price for the market. The market is going to be the bull, and the time that it's supposed to drop is going to be that cage opening. Once that cage opens, the bull is let loose. The market's going to do whatever it's going to do, and it's going to move in whatever direction it wants to, and is prepared to move. Similar to a volcano as well. Look at it like an active volcano. This type of analogies to help you understand it better. News events are going to be like that, because once they come out, a lot of times they add a lot of volatility, a lot of chaos in the market. Sometimes if you are not careful, you need to make sure you have this calendar saved. Always look at it at the start of every morning, at the start of every week, the start of every month, so you have an idea on when the market should move the most. Now, on days that we do not have news, you will oftentimes expect lower volatility. You want to be careful on these days, because news is what provides volatility for the market. It provides liquidity, it provides volume, and that is your friend. Volume and volatility is your friend, because you don't want to be in a trade and we're just moving sideways. That's always terrible. Price action is just barcoding. Don't nobody want to go through that. Like, a lot of times when we don't have news, you'll see the market just looking like this. Just back and forth, and this is a recipe for disaster. When we do have news, though, you will see efficient moves. A lot of times you will see good action, good price action, and price will be efficient. That is what you want in the market. Now, this is obviously not guaranteed. This is not going to be every news event. We will have times where the market is just bad that day, despite the news. But for the most part, these news events will drive the market, and they will help you when it comes to price targets, when it comes to predicting certain areas, and when it comes to understanding whether or not the market is going to be effective for that day. I have my filters right here. I will show you guys. I have red and orange folder highlighted because these are the highest drivers for the market. Yellow and gray don't really do too much. Honestly, they don't really affect the market too much. Sometimes they may. Even orange folder is not crazy, but I keep these two main ones highlighted because the rest really don't matter. They're not going to really provide a bunch of volatility within the market. And I have USD highlighted because that is what I trade. I don't trade Forex or CFDs, so I don't pay attention to any of this. I mainly keep the US highlighted, and you can copy that if you would like. But that's that. And as you can see for every week, every day, you can look at the news events. A lot of times, pay attention to what they can be predicted as. You can see whether or not we're going to be bullish or bearish. And that's also how you can go into the market. Just understand and see what type of news we have. Oftentimes you can also look these news events up online, and you can see the prediction. That can also maybe help in your bias or analysis for that day, depending on what the event is. Let's talk about no news Mondays and no news Fridays, because it's actually very important. No news Mondays, I would say, for what a lot of people do say, is you do not trade them because the market is often very inefficient, very just bad, and you will see that as you get to grow. This is what works for me, at least. I don't trade no news Mondays anymore, or if I do, I will trade them with a lot lower size, or I will just back test them. I will demo trade them because I find myself losing the most on those days. Same with no news Fridays. Mondays and Fridays are usually the slowest days when we don't have any red or orange folder news, when they're just blank. Oftentimes you can expect lesser probability within the market. Now, I also want to emphasize expectations can kill you in the market. You do not want to go, oh, just because we have no news today, that means we're not going to move. Or just because we have news today, that means we're going to move. Do not expect anything. Let the market show you. I have a lot of data. I have years of statistics stacked up that show me that no news Mondays are my worst days, so I don't trade them. But you shouldn't go into any day just expecting, because we will have that diamond in the rough sometimes where you have a red folder news day and we don't move. Or you have that no news Monday and we move great. Like, anything can happen at the end of the day. There's no guarantees in this market. There's no guarantees in life. You do not want to go into the market with these expectations of guarantees. But that's essentially it, though. That's really how I look at it. I look at this every morning, every Sunday, and every start of the month, just to see what we are expecting for the month, see what days or which weeks we can expect better price action. I can maybe up my size if I have a plus setup that day, just things like that, how to mitigate risk on different days. And if we have a red folder day that is on a Wednesday or a Thursday where price action is expected to be better, I will oftentimes up my size if I see a good setup. And then if we have a no news day with a good setup, I might lower my size just because the market is less likely to move in my favor. So I'm going to protect myself in as much ways as I can. That's how you can use this to your advantage as well. Just understanding what days we have, what the most important news events are. There's a lot. Unemployment claims, PMI, NFP, consumer sentiment, all this stuff. The red folder are the main ones you should be paying attention to. The orange folder are cool, but red folder and the times of red folder are the most important. Some people don't even look at orange folder. Red folder is the most important, though. Keep this in mind. FOMC, funds rate cuts, all that stuff is also very important. What is not shown on here, though, that you should also keep in mind is earnings. Earning announcements for big tech companies and big stocks in general, when they announce their earnings every quarter, those are oftentimes very important and very volatile days that happen post-market, and you can see a lot of times you will have very large moves that this does not show. So you need to get that somewhere else. I usually just use any type of stock news app. They just alert it to my phone. I have it turned on here. I'll see if I have any alerts from today. CNBC. I just get any type of alerts from there, and that is how you can operate it through that. But that's essentially how to use this forexfactory.com, where you'll get your news from and why it is important. I hope you guys enjoyed this video, and I will catch you in the next one. So.